Hey guys, we're back with another episode of the Tech Behind FinTech. Pretty exciting show today. As always, I have a guest, Manny V. Let me do the bio check-in and then we can jump into the show. So joining us today is Manny V, security architect and digital asset investor, also the co-founder of Mentalism, which is a digital asset research platform. Manny, thanks for joining.
Hey, how you doing, man? Thanks for having me.
Oh man, I'm doing spectacular. Always like bringing on guests with certain expertise and jumping into like excellent topics. So definitely excited. Let's get some housekeeping stuff in order before we jump into the show. So first, guys, we are live from Facebook, LinkedIn, YouTube, and Twitch. That's through our StreamYard platform. So we're shooting out there. If you want to see, we're going to be posting. Sometimes we post some slides and different things that we get into. We're also live on Instagram. I invited you on Instagram. Okay, there you go.
Yes, it should be coming up now.
Let me accept it. All right. What's cool is let's see if it pops up. All right, you're okay. So what we have to do is turn the volume or something down there. All right, so cool. This is like the first time I'm actually doing this, which is pretty cool. So for those that are on LinkedIn, Facebook, and YouTube, you don't see it, but we're also in the background live on Instagram through our cell phones. The platform that I use, it doesn't stream on Instagram. So we have two things going on. So we'll do a post show on Instagram. But let's jump into it. Let's jump into it. So today's topic is crypto investing. Where do we go from here? It's a bunch of news articles we're going to talk. We're going to get Manny's perspective. Before we jump into it, let the audience know about Mentalism.
Yeah, so Mentalism is a need. Wow, so this is a lot of feedback on this Instagram here. So Mentalism, for the most part, wasn't generated as a company that focuses on researching digital assets, right? There's a lot of misunderstandings of what crypto is. I'm gonna have to get Instagram away from this phone here. So with Mentalism, there's a big gap in aggregating a lot of news, a lot of market data, how your coins are performing. You'll have to go to a lot of websites, a lot of applications to get that stuff, right? So Mentalism is aiming to have a lot of live market data, a lot of research platform capabilities similar to what real professional investors use, like say the big guys. I'm not going to name any institutions or corporations here, but anybody that's familiar with day trading, hedge funds, big corporations, and what they do to manage their money, a lot of them have tools that most people do not have. We're trying to create that for the crypto space for the average investor that needs to do research and wants to make sure to make sound investments, and having a platform they can log into to get their latest news, to track their coins, to track their own portfolios, and interact with the Mentalism team for specific white glove services as well.
That's pretty awesome. Thanks for that information. So excited to have you here. It's a lot going on in terms of the crypto markets. Obviously, we've seen the market is under $1 trillion. I think back in November 2021, it was at 3 point something trillion, the overall market. So it dropped down considerably. We had different news articles like the Terra Luna the Terra stable coin, just basically being devalued and so forth. A lot of people have lost a lot of money. On the opposite end, some Wall Street guys who played shorts on crypto, actually companies like Coinbase and so forth, they said they cleared over 4 billion in their shorts. I was reading an article on that. So, just want to get your perspective first. Let's help the audience understand what is exactly happening right now. Like, what's the state of the crypto environment? What's going on?
Right. So, by proxy, almost all investors in every asset class, whether it's real estate, whether it's stocks, whether it's crypto, are feeling the pain of the retraction of all the funds that was keeping the markets propped up during the bad economic times. Meaning that basically there's that reset that was talked about in 2020, as far as the AMC, the meme stocks, the investment landscape started changing, and big money and smaller money started to see that there is a shift that needs to happen. a reset that kept on being talked about. I feel like that reset is now upon us because now the Fed is retracting those rates and the real prices of all these assets are starting to become fruition. So I feel like right now is a time for investors to reset, and we'll definitely cover that a little later on the show as far as the sentiment of the average investor. But even the smart money, the banks, the institutions are also realizing that this is a time to reset your portfolios. Take a look at your research strategies, take a look at your risk appetite, and find another way of investing for the future. So I think that's what's happening overall. We could point out activities, and different events, but I feel like overall that's what's happening from a macro perspective.
Yeah, I mean, from a macro perspective, I mean, like you said, like, interest rates are increasing. This was another rate increase recently. We have, a war going on that impacted, oil prices and different things of that nature. So, it almost seems like a series of all of these, I don't know, for another term, they call it black swan events happening all at once, right? And now we're just seeing some like downward pressure. Plus, some DeFi protocols just they weren't legit to start with, right? And got billions lost there. You have some breaches that happen, additional money being lost. So it's like all these different things happening overall. But to your point, I can't. I I'm also I also dive into some real estate here and there, but so and also know people trying to buy homes and in certain areas, it's still people paying way over asking just to get it. So real estate seems strong. I mean, I think as interest rates increase, obviously there's going to be some impact probably within the next few months or year. But stocks, right? 100% agree with you on that, right? We've seen portfolios just down, right? And some people say, listen, we had a good run. Runs can't last forever. And then you just see the effect from Bitcoin going from 66,000 like a year ago to like, I think it hit 20,000 recently, 21,000. So, a lot, I see a lot of people who maybe were early investors and didn't know too much about crypto. Panic is arising and they're just trying to sell off. I mean, we've seen this happen in 2017, 18, right? And when things were high, went low. If you held on for a few years, it circled back around. So it's just all interesting stuff, man. And it's just all interesting.
No, it is. So you said a couple of things I wanted to touch on.
Yeah,
number one, hacks have happened. But if you actually take a look at and follow up to what actually happened after those hacks, because crypto is misunderstood, a lot of people believe that it's a bunch of scams out there and there's no good projects. Of course, that's far from the case, or else big venture capital money wouldn't be pouring in by the week almost. Big institutions like JP Morgan wouldn't have a branch in the metaverse, right? So there's a lot of things that are misunderstood about the crypto space. Number one, all the hacks for the most part that make the news, most of those hackers return most of that crypto. Because the thing is, there's sleuths out there in the crypto space that want to keep the integrity of crypto, right? And make sure, hey, if somebody's translating stuff that they shouldn't be doing in transmitting funds or doing things in a way that's manipulating how smart contracts were configured, they will be able to see what the addresses were. Now, because of that transparency, there's a way to find the person. So every wallet address, it seems like it's a long number and you'll never find out who it is. If you steal enough money, someone's going to find out who you are. So most people end up just taking a bounty and returning most of that crypto in most cases when it comes to hacks. Number one. Number two, hacks is not really responsible for billions in most cases. Some of them were in the higher hundreds. So if you total all the crypto hacks, and it will be over $1 billion for sure.
Yeah.
But those people, people that are affected by those hacks are not usually reciprocated. They usually are reciprocated. They usually are impacted temporarily, and then they get reimbursed in most cases. Number two, the narrative that that crypto is dying and people don't, it's all meme coins. Well, it's just like the internet in 1997. Back then, a lot of people still subscribed to newspapers, right? Still went to things in person, went to the library, went to the bookstore, right? Information was not really something that was pulled from the internet, right? It was more for entertainment purposes. So people thought the internet was a fad. The internet's not going to last, and then you see Net Zero, AOL, right? Those kind of companies that provided internet service back in the 90s, they were the ones that people judged their whole perception of the internet on. So if something goes out with Net Zero or blue light and you can't get on the internet, oh man, the internet is just trash. Look at it now.
I mean, the interesting part are like what I see. First of all, I don't know what's going on. I think with the Instagram is some feedback going on.
There is. Should we kill it?
Um,
Because I can't turn it on my volume. I can't turn it all the way down. I'm not sure about you, but it looks like Instagram, because I'm on a live, it's not letting me.
You know what we'll do then? I think people will still we'll come. We'll do what we'll. So if my guys on Instagram, we're gonna do a post show on Instagram, and if you'll just, I'll add you back in, and I'll keep mine going. And then
Okay.
it won't be any feedback. 'Cause I'm not getting feedback on my end. So let me see how to
I'll just exit it.
All right, cool. Yeah, so
Right.
that works.
Yeah, that was throwing me off a lot, man. I was trying to keep it.
No worries, man. That's me. Look, it's live. These things happen.
Right.
Jumping back on topic, right? One thing I found interesting, I like to pull up some articles during the show. So
Definitely.
let's see. Not this one I found interesting. Not this one. Not this one. This one, right? I think you said this to me also.
Yeah.
Most of the world's wealthiest individuals have bought digital assets. So let me just read something here. Furthermore, 91% of respondents under the age of 40 had invested in digital assets. The report stated that cryptocurrencies were considered the favorite digital asset among investors, with other sought after digital assets, including exchange traded funds, ETF, and metaverse investments. However, the size of crypto investment made by high net worth individuals remains speculative. As of January this year, 14% of portfolios are allocated to alternative investments, which also include commodities, foreign currencies, private equity, and hedge funds. I mean, look, just on this particular article, right?
Mm-hmm.
And what I gathered from it, the idea is diversification, right? So whether having a diversified portfolio is always beneficial. They have some parts in crypto, have some parts outside of it.
Right.
Just want to get your perspective on that.
Oh, yeah, definitely. Number one, I think that's very important when you're talking about digital assets to distinguish the difference between digital assets that have a function and some that do not have a function. Right. So cryptocurrencies, there are actual crypto and crypto projects that are addressing monetary needs. Right. So Bitcoin can be used because it's a store of value. So therefore, that is a currency. Right. However, if you look at one that say, another project, I'm not trying to shill anything here, so I'm not going to name any projects, but I'll say a project that has functionality for a specific case, right, may not be currency, right? So number one, I would just want to say that there are digital assets that actually aren't even blockchains, right? There's some that are DAGs, right? So they're decentralized. They're decentralized.
People understand what a DAG is?
So a DAG is another form of a type of ledger. Distributed ledger. So, right, blockchains are just digital ledgers, right? They have an accountability of every transaction that's traced. As you're a participant of that, you'll be a part of that blockchain. You can look to see since the inception of the project, all the transactions that's been out there. Blockchain is one and DAG is another, right? So there's another way of distributing that ledger amongst network nodes, and how you finalize transactions determines whether or not you're on a blockchain or a DAG. So there's a few classes of assets that will fit into this category. I'm trying my best to not shill things here and talk specifically about what these are. But DAG stands for directed acrylic graph. Directed acrylic acyclic graph. I'm sorry, not acrylic, acyclic graph. Sorry, go ahead.
I think it's fine. Like, look, if we're giving examples, I mean, it's definitely like DeFi projects like Aave. We're going to obviously get into Celsius because that's obviously it was some news.
Okay, so yeah, you may be more comfortable. Yeah, okay.
That's not a problem. I mean, look, we're not. It's not advising people to invest, buy, drop, nothing like that. But look, it's almost like if we're talking about investment banking and we don't mention JP Morgan or Barclays or UBS, I mean, they're investment banks, right? Are we talking about certain fintechs and we give an example? So no, I think that's perfectly fine. It just
Okay.
we're not giving our opinion of it. It just happens that these are the things, and it's on the news and it's public, so it's fine. Let's go in.
Okay. Yeah. So basically, there are some projects out there. I mean, let me see here. So if you look at like Constellation, which is one actually named DAG, DAG, that's a pretty popular one. They actually have some relationships with some DoD functionality, and there is a few things that may or may not be classified or not. So there's a lot of details that aren't being shared, but just know that the DoD is participating and using the Constellation DAG protocol for solving a couple issues, right? There's a
So like, how does that work? So like from a high level, how would like different, from a government perspective or security perspective, leverage a DAG?
Okay, so there's a lot of issues when it comes down to, we know supply chain security is a big issue, right?
Yeah.
So what a ledger would do with, like, say, supply chain, which affects almost every organization, whether they realize it or not, the authenticity of the parts that come to be components of your organization, whether it's microprocessors, whether it's a USB cable, right? Whether it's a whole phone or a tablet, the authentication of these approved processes and manufacturing processes to make sure they fit American standards, the IEEEs of the world, the ISOs of the world. You can certify your products and then also make sure that it's traceable to the blockchain. So if you incorporate the blockchain enforcement for all your suppliers, then the authenticity and the way to check and verify whether or not a product or a service is authentic can be tracked through a digital asset ledger like a blockchain.
Yeah, I mean, so basically, real high level, you're leveraging the same transparency that's inherent to blockchain to basically look at certain raw materials in your supply chain process to just verify it at every point of the way.
Right. So if you look at, say, if you're buying wholesale microprocessors and you want them to make sure that every person that's checking them in the test is entering, values on the blockchain to show that they were, made by stuff, like, say, mined by metals that don't use child labor. Right. You could say, make sure they went through these vigorous testing, and the ownership and the value entered into the blockchain can be traced down to the individual. Right. So if there's a whole block sale of, like, say, microprocessors, and you want to authenticate each piece, right? There's actually a technology called VeChain. VeChain is a centralized product, but VeChain is a blockchain product that answers a lot of supply chain issues. You can say, you know what, I want to make sure that all my metals for these microprocessors are mined in a certain way ethically, and I want to make sure the transparency for this vendor, if I'm going to buy a whole bunch from you have to use the blockchain now from now on, right? So it's not fungible, right? You can't change it, right? It's immutable. When you put data on a blockchain, you cannot go back and edit it later. So,
and I think an important distinction, especially for some people who are not as familiar, is, two aspects. You're looking at more so with what you're describing. That's the functional aspect, where it could be used and leverage the technology of it. And then another side where we're looking at it, when we talk about crypto and money, it's actually the monetary or being used as a form of currency aspect. Two distinguishable stuff. Yeah, underlying, right, the same technology, but now you're leveraging it in a multitude of ways, from how you just said it, conflict diamonds and so forth, to actually microchips and tracing it along the supply chain. What it sounds like I would say that term, like a chain of custody almost, right? Like how we that's what it's from us on the security side and legal side, right? You have some chain that is. Would you say it's similar to that?
It's exactly that. I mean, of course, that wasn't the original intention when it came down to how Bitcoin first came to fruition, but that was an indirect benefit of having that, because that technology does allow you to have that level of transparency, and simultaneously, as an investor, be interested in actually use the token for other things as well. It was a lot of things that was considered when it came down to developing cryptocurrency, and that's an indirect result of some of that, for sure.
And it's so funny. Like I know people who, like I said, I have colleagues, friends on both sides. I know people who are vehemently opposed to looking at crypto as any type of investment. They think but those same people, though, totally buy into the functionality aspects. If you gave them a use case on, listen, how can we leverage this technology to do X, Y, and Z, they're brought in. If it makes sense, but on terms of in an investment side, will totally not put a penny of their money into it at all from that level. So I find that always interesting.
No, I see it as ironic. It's ironic that you feel safe using tokenized money every day. You're using symbolic money with your debit card right now. That's not actual bills. You think that's air you're smelling, right? It's like the Matrix kind of thing, right? You actually feel like, if you feel like we're not using tokenized money right now, you don't understand how debit cards work, right? And I'm not saying that people don't understand that stuff, but meanwhile, crypto, for the most part, does represent assets, right? And to me, if you're misunderstanding what fiat is or how fiat is made or what fiat is actually backed by,
you know what? I think
people understand the value of crypto.
Episode hold on, let me just say on Instagram. Hope you guys can hear us. And if I pinned the link for the show at Tech Behind FinTech, you can get it live there and look at the comments. We'll do a post show on Instagram. Just have to do that little Instagram shout out.
That's all people were saying they couldn't hear on Instagram, but we couldn't,
Yeah, I think they should be fine. But just go to the Tech Behind FinTech. You'll get a live stream of our show. That's on our platforms. Also, if you want to drop a comment in, definitely, I need to have a show where I have a crypto enthusiast and a crypto, the antagonist of that, who just doesn't believe in it as an investment. And I got to get a panel. I have to put together that thing one day, because I know some people who are just so passionate about it, and they get it. I know other people that are just opposed to it. I need to do a panel show on it. That'll be like a real interesting dynamic. If you have comments, please, whether you agree, disagree, want to add some information, ask a question, drop a comment in, and we'll post it, and we'll talk through your talk through the answer. So there is a lot going on in the market. So one of the things that happened over the last few years was this whole concept of crypto, like these DeFi projects that kind of acted as a bank, right? You deposit your crypto in there, they gave you ridiculous amount of returns that, not ridiculous in terms of what you make at, you put your money in a bank, you get like what, 0.00000 whatever.
If you're lucky. Right.
But you put it in these projects, not like cash, you put like your actual coins, and they'll give you an insane amount of return,
right,
compared to if you just stored fiat in a bank. One of these major projects was Celsius, and we're going to go into that. And recently, due to illiquidity, they announced that withdrawals are being suspended. Let me pull up that news article, and you can help us kind of walk us through it, why that's going.
Yeah, so basically, right, I sent you a couple articles. I've been on a hunt myself, right, because what really piqued my interest was what happened with Terra Luna. So I'm not going to kind of attack or say anything too speculative, but I will say this: Terra Luna was the makers of the UST stablecoin. The UST stablecoin allowed for 20% APY. So anything that you deposit as staking on that platform, you would get rewarded 20%. Let me explain staking real quick.
I was going to ask you that.
Right. So the means in which most of these DeFi projects was able to receive so much funding and it stayed afloat for so long, when the market hit almost $3 trillion, 80% of that was in DeFi projects. DeFi projects, decentralized finance projects, allow for you to act and use tender similar to money, except it's the currencies for the blockchain that you participate in, and receive rewards for helping prop up and contribute to that blockchain. So they want to award you for saying, you know what, you brought 100 of this token and you're keeping it locked in our environment, right? And because of that, you give us 100, tokens. We'll give you 20, the value of 20 over the year. So you're incentivized to keep your money in there, right? Wouldn't you keep, if you had $100, you can make 120 and you're not even touching it, wouldn't you keep it in there? Right, you would definitely keep it. I mean,
of passive income, right?
Right. So think about that, right? If you're looking at every project, that was worth investing in, in my opinion, had pretty handsome, rewarding APY. Some of them was 12, some of them was 20. But meanwhile, most of the ones that are suffering, what we're looking at now, as far as these implosions, was because their backing for the stable coins or their actual assets on the market were somehow linked to the price of Bitcoin. Right now, when the market started shifting and we left that bull market, the price of Bitcoin did go down a lot. And depending on the relationship of the algorithmic formula that had the Bitcoin relationship for every project, may have had an immediate impact or a delayed impact in the price of the stable coin based on the relationship of the stable coin's relationship to Bitcoin. Right. So there was a legitimate concern there when he looked at some of these stable coins having to correct from the back end to make sure the value of their stable coin was at one fiat dollar, right? So when people were incentivized to keep the money in there, that didn't change because Bitcoin dropped $20,000. You still get 20% of the money that you put in those projects. So why all of a sudden do these projects not work? That makes you question and take a look at, okay, is there something else going on here where, if these stable coins that were on these blockchains had all this institutional money and the institutions got scared and they pulled their money out in similar fashions and in similar time frames, the stable coins that are algorithmic, that have relationships with other coins in the market, are going to have to produce more. That's going to saturate the level of supply. When you saturate the level of supply, what happens to the value? Right? The value is going to go down because scarcity is what drives price.
Yeah.
So if you look at the participation of all these platforms like Celsius, right? I mean, like Luna, like Anchor, Tron USDD, right? There's a lot of projects out there that still give good rewards to this day. So the question begs, okay, if the average institutional investor, saw that and saw get 20%, what's the value of them pulling out when they were getting 20%? There must be another motive behind that, which is entering the market at a lower price, participating when things are less volatile, and there's a lot of things that may have cascaded off of the initial market corrections that we're seeing, but ultimately it seems like there's a chance to reset even in the crypto market how people are investing. So that's what I would say to that.
It's interesting you said that. So I mean, in terms of like on the obviously two sides of money. You have the institutional money of the retail. So institutional, when we talk, those are like, your retirement funds, your hedge funds, your big businesses. Retail are the everyday person. I just want to just give that level of clarity. I want to bring up this news article because it's obviously been pumping through. I mean, you have things going on with the Luna Terror. We definitely talked about that for the last few weeks and just bringing it up just about the collapse of it and so forth as a news article. Now with this Celsius, they announced this week that like no more. They're suspending withdrawals, and they linked it to a part in their terms agreement that they're now exercising.
Yes.
Can you go into staked Ethereum and Lido and so forth, because it seems that part of it is linked to that.
Okay, yeah. So when a cryptocurrency is staked, right, it could be rebranded based off of the functionality of the blockchain. If you stake Ethereum on that platform, you're going to get in return a representation of Ethereum, not Ethereum itself. So staked Ethereum is actually lowercase s, lowercase t, big capital ETH, right? So if you look at staked Ethereum, it's really a representation of Ethereum. And it represents the fact that the value that you have in staked Ethereum is how much you actually put into Ethereum on a blockchain to get staking rewards. Celsius was a big part of some of the staking protocols out in the space, right? So Lados is just one of them. There's actually a couple others. And they actually borrowed some money from FTX and had to pay that back before they locked down the withdrawals, which means they had a liquidity problem to begin with. But the liquidity problem may have been because investors, major whales, pulled out of their platform. So when that happened, what's interesting is that Celsius was one of the major whales in the Terra Luna space, right? So there were 7 wallets that were identified that have a lot of cryptocurrency on the Terra blockchain, staking UST, that all pulled out within a week or so of each other. And Celsius was one of them. And now Celsius is illiquid because they can't cash in their staked Ethereum because the price of Ethereum is not stable enough to cash in the amount of staked Ethereum that they have. So until they solve that problem, they won't be able to cash in on all their backing because they pretty much put 100% of Ethereum into the staking protocol.
Yeah, I mean, I remember the price of Ethereum at like last year, it had the highest 4K, and now it's down to like 1,000.
Yep.
It's going below that. And I know that, in doing some of the research, right, going through staked Ethereum is not your only option. Like I think the minimum was about 30. If you had 32 Ethereum coins, you could stake yourself. You just stake directly. You could avoid all that, but it's locked in for a certain amount of time, I think, until they go to the upgrade happens.
If it happens. I don't know who's keeping count, but you can count on 2 hands how many times they missed that deadline.
Yeah, I mean, I think now they're saying, they're shooting for the summer, but we'll see.
So I'm not holding my breath, and the logic, just real quick to touch on that, while people wonder what's going on. When you stake Ethereum, right, you're staking it on what they call the beacon chain. The beacon chain is consolidating the proof of work mechanism that is the current native mechanism to validate transactions on an Ethereum blockchain that uses hardware and computing resources to do so, right? So that's the same complaint as far as the people that say the energy consumption of crypto. Proof of work is the reason why people talk about that. We could definitely touch on the energy consumption. There's a lot of misunderstanding about that as well. Christmas lights are way more burdening on the environment than any crypto project. But anyway, I digress on that. As far as the understanding of how proof of stake is going to affect Ethereum, one of the reasons why it's such a delay is because all the miners that arbitrage all this Ethereum with the hardware that does the computation for the proof of work side of Ethereum doesn't want to let go of those gains. They're too incentivized to do so. Now, being that there is a protocol of governance on almost every blockchain, right? The people that own the most of it have more weight and have more of a vote. But anyone that's holding these projects, as an Ethereum holder, you can actually vote on the proposals to get certain things enabled. Now, because miners have most of that stuff, right, they can vote on when they're going to have things enabled to go totally proof of stake, but they lose all their rewards in the meantime. So what are you going to do if you're in a miner? You're going to make it hard and you're going to draw out the process, which is what happens. They keep on saying that there's a logic bomb that is out there that, once they implement that on the blockchain, it's going to make it a lot harder computationally to deal with the proof of work side, and proof of stake is going to start making it a lot easier, right, to incentivize people to get off proof of work. But the people that are doing proof of work are not going to vote for that. They're not going to vote for that. So you're looking at a conundrum of, this is why Ethereum can't move forward. When you stake Ethereum, you're staking it on the proof of stake side, which means you can't get your money out until Ethereum has totally converted. And here we are.
No, I mean, I think that's a great summary of the current status. And then up until you just said that, I didn't look at it from the angle of once Ethereum upgrades to the proof of stake, the current proof of work and the miners that are involved with that, there's no need. I mean, it's going to be another way to get consensus using proof of stake. I mean, that's a transition, but obviously, some of the people that are involved on the proof of work side, it's not going to be needed anymore. So they got to convert. Question for you, I know we're going towards the we've been talking for a while now, and I know we got to wrap the show up soon. For the everyday person who has crypto, they see what happened with some of these projects like Celsius or, certain exchanges are becoming very volatile, but they want to necessarily hold on to their crypto for the long term. Can you talk about, or do you recommend hardware wallets or getting it off how would they maneuver that?
Okay, so number one, it is always best to have a hardware wallet and to keep your money off, or keep your crypto off the exchanges. Because of what happened with Celsius could happen at any point. Crypto.com could do it, Binance could do it, FTS can do it, could say, you know what? Yeah, this is still yours, but you can't have it right now. Because remember, if you don't own the private keys, you don't own the crypto. They can literally do whatever they want with it. When you transfer to a hardware wallet, you're impervious to those kind of things. You control it 100%. So that's number one. Number two is we have to make sure we're very aware of our emotions, right? As an investor. Like you say, you take your emotions out of it. You're somebody I look up to and somebody I know in this space, and I feel like you're more sophisticated. And a lot of people that just enter the space, and they might not have the mindset of that long-term investor that to me we're being forced to adopt. If we want to believe in investing in any asset class, even if you're new, you're gonna have to learn that this is not a 3-month thing. This is not going to be a year thing. You're gonna have to look at a very much larger time horizon. So I would say your discipline and your emotions need to be in check. I would say if you looked at your all-time high in your portfolio, which everybody has, of course, you weren't going to cash that in anyway. Being realistic. You're not going to say, you know what, I made enough money. No, you're going to hold on to see if you make more money. And the thing is, the issue with that is
around that. You just said what I always find interesting is you look at that all-time high, and then when things go real low, you always start thinking, wow, what if I just cashed out, held the money, and then came back and But you're right. I mean, you start watching the all-time highs and you start thinking this run's going to last forever. You don't want to cash out because you're like, maybe I'm not close to retiring. I'm good. I don't want to necessarily pay capital gains tax on that money. And then all of a sudden when it shoots, get that knot in your stomach. That knot is real. And you know what? I mean, it hurts people who are actually close to retiring. I mean, whether you're in the we're talking crypto, whether we're talking your retirement account with your stocks or whatever. Even during the '08, like when you had, some people relied on their properties, about to sell it, and market just tanked. Now you can't even sell your house. You kind of stuck in there for high mortgage. So yeah, well, you just said that. I laughed, and thanks for the compliment. I definitely appreciate that. I have my, in all full transparency, I do have my fits of emotion at times when it comes to like,
we're all human. Yes, sir.
I'm not impervious to that. So I appreciate that. Yeah, all great points that you mentioned. I love what you just said. It's not like you are going to cash out your all-time high.
Right. Unrealized, let's say it to yourself, right? These are unrealized profits, unrealized gains. If you still have 500 tokens and they got to $1 million and you still held them and it's worth $1,000, guess what? You still have 500 of those. Now, if you believe in the project and looking at the time horizon based off of the projects that you look at before you invest in them, which you should be doing, by the way, best practices, which I'll touch on that in a minute, is you make sure you realize that the projects that you're looking at have a road to adoption. And what does that road to adoption look like? Now, meme stocks, different story. I'm not even going to cover those because that doesn't apply. Those are fads. Those are, quick, for the most part, quick come ups for money. And of course, the bear market's no place for them. That's why no one's hashtagging Dogecoin anymore, right? But if people have looked up what Dogecoin does, it's a clone of Bitcoin, right? It moves just as slow as Bitcoin. It has all the challenges as far as scaling like Bitcoin, but it had a bunch of value pumped into it because of the current economic landscape and people kind of buying in and really inflating the price when it didn't have any value. I'm not talking about those. I'm more speaking of the actual solid projects where, you mentioned Aave. So Aave had a really great use case, right? Decentralized finance. You're able to loan your capital, loan your crypto for people to borrow it. You get an interest based off of that. You can stake your stable coins, right? So it was giving you all the options of a bank without going through the hassle and the unfortunate arbitraging of your own gains, because a bank could literally go back and take the money in your savings account, go on Aave, make 20% and give you that 0.0001 we talked about earlier, right? But Go ahead. I'm sorry. I know I said something. I said a lot.
I mean, it's interesting you said. I think the thing with banks people feel comfortable with in modern life, in like recent times, there hasn't been a situation that I can recall, at least, in which you put the money in a bank and then all of a sudden that money just disappeared. I mean, whether it's FDIC and you're insured, you're protected, even though you're not making the same type of interest on it, that, listen, we're not talking about inflation, what the price of a dollar, we're not talking about that. We're just talking about, look, I put $1,000 in the bank. I forget about it, right? Unless I obviously have to keep it current, or that's a whole nother conversation. If I keep it current, checking my account, whatever, I know next year is going to be 1,000 versus a situation like this, where you put 1,000 into one of these projects and now you can't even withdraw it. So I think, that's a legit. Obviously, you're not making. I mean, and because there's risk and reward. Obviously, the safer it is, in most cases, the less you're going to get in terms of ROI. The more riskier, in most cases, the more you're going to get. But there's risk. So
So in our recent history, we have not seen what we call a bank run. We have not seen that, right? But we know that a lot of it happened before the Great Depression. Right. And really, if you look at the events of the Great Depression, a lot of that stuff happened, I want to say 1908. A lot of banks got brought out. A lot of banks got illiquid. Right. And what happens then can still happen. The thing is, how's it look? Right. How's a bank going to be able to do that? You can't really do that. But you have to think about it. If everyone wanted to take their money out of the bank right now, do you feel like your bank would have it? If everyone that that had a Chase account went to Chase branch right now, say, let me take all my money out, Chase is going to say, hold on a couple days. Why? Because they got to short the market, get some money back, going to play with it. And to me, your money's not there. That's my whole point, is they're taking your money and they make you feel like it's insured. But if everybody needed to cash out, it wouldn't be there.
Once again, I mean, that's a whole other show that we can get into, and with the proper research behind that. But no, man, it's definitely an interesting. Like I said, I always like having conversations with crypto enthusiast, and I like having conversation with crypto disbelievers. And I just like getting those perspectives. I find it interesting. My personal opinion is, I learned over the years, I think diversification is key.
Yes.
I think, that's always just been a right sound approach. And, I mean, on a personal side, I like real estate. I just, you have to live somewhere. But, and then, and that's how I take at it. So we're going to transition right now to a post show. Let's close on this platform. Any what do you want to leave the audience with?
Number one, fortunes are made in the bear market.
Okay.
So you have FOMO, fear of missing out, which is traditional, that's a sentiment that everyone feels, right? Something you invested a little bit in, or you thought about getting and you didn't get in. Now the price is skyrocketing and you want to be a part of that. You want to be part of the ride up. Remember, the ride down, that's where the quote unquote smart money gets in. You want to get in with the guys that you owe money to. The guys that run your credit cards, what they do with their money, that's what you need to do. So I would say when I'm not a Buffett guy, but I do believe he said a lot of great things about investing, and being greedy while others are fearful, to me, is something you want to keep in your brain. These big banks, they're making a choice. So make a choice during these times where the market is correcting, whether or not you feel comfortable parting with a certain amount of your money. And when you part with that money, realize that it's not going to be valuable for another 2 or 3 years. That's what I'll leave the people with. And I would say observe mainstream media, observe your sources of information. And now you get to see how valid some of the big major, Bloomberg, CNBC, some of these bigger corporations of the world, when they project what's going to happen. Now you can look at it and say, you know what? They said crypto's trash. Let me just see what that looks like for the next couple of months. Let me see what it looks like during the next bull run. You might change your whole research methods because now you're seeing in real time how some of these things may or may not be aligned to your risk appetite as an investor.
No, thanks for that. And really thank you for taking the time out and coming on the show. Really appreciate you. Another last thing, how can people find you? How can people learn more about Mentalism and so forth?
So actually, what I would encourage anyone that's interested to contact me, we'll actually receive it. But going to metallism.io and subscribing, what we're doing is we're preparing the alpha launch of our platform, and we'll have a beta as well. Those that sign up will have a chance to be a part of the alpha. We're doing end user testing. We want people that are novices and people that are experts to try the platform out. You get to research the coins that are interesting to you, look at their history, look at any related news, look at their partners, the venture capitals and investment behind those projects and things like that. And that's becoming by the 3rd or 4th quarter this year, depending on how fast we get developers to finish a couple things up. So I would say metallism.io, you subscribe there. We will be in contact with you. And, I wish you all luck.
No, and what I want to do is I'm just trying to go to the website so I can post it, and so it could be part of this video. I'm doing that right now.
Yeah, metallism.io.
I know the name is spelled differently. I'm just gonna put it right now on the site. I went there to verify the link works. It's posting right now, and what I'll do is so it can be permanently part of this video. Boom, there we go. Metallism.io. As Manny said, you can sign up there. I'll leave it on for a second. People can see that. Yeah, so definitely. Once again, thank you. I look to have more conversations with you.
Absolutely.
Moving forward, so we can circle back. And I need to figure out over the next few months how to put together this panel, because I feel like I have these conversations on the one-on-one, right? And then with people who are so passionate on both sides. And I would like to just bring them all together and do a panel discussion. And I know it's going to be high. It's going to be people that are real passionate about their ideas on both. And we have to kind of figure out a way to mitigate the back and forths and let everybody speak. But I think it'll be an interesting run, because I get these conversations in my ear from both sides. I'm just like, listen, why don't both of you guys just talk to each other? So
I think you could. I can help you with that. I mean, and the thing is, I may or may not. I mean, it depends on who you bring to the table. I like to, but as long as they don't yell too much, I could talk to anybody. So
I hear you on that. Well, listen, thank you very much. We're gonna do a post show right now, so you can join me on IG.
Yes,
once again, guys, thanks for tuning in. The show is sponsored by Strategic Generation. Look to Strategic Generation for your SOC 2 compliance and different security assessments and so forth. I'm going to be tuning out right now. And once again, cheers. Have a happy weekend to all.
All right, guys. Thank you for joining. Thank you for having me. Take care.
Thank you.